Is now the right time to buy PayPal? With tech stocks taking an absolute tanking since the start of the year, investors are no doubt on a mission to find stocks going for a bargain. PayPal certainly meets that criteria, having slumped 75% since July of last year. However, there is an element of timing when it comes to buying into stocks that are going for a discount. Get it right and you'll be nicely rewarded. However, get it wrong and you'll be stuck with a stock that is just losing you money. And so the question is, when is the right time to buy PayPal, which is the topic of today's recording. My name is Zahir Anwari and I'm a co-founder of SublimeTrading.io. If you like this video, guys, and it's helped you to up your investment game, do like, subscribe and hit the bell notification. And don't be greedy, share it with those who need to watch this. We have helped hundreds of private investors over the past 10 plus years profit from trends in the markets through our simple to learn methodology. I also write for a number of publications, including benzinga.com, and I'm regularly invited to guest speak on how everyday people can skyrocket their stocks performance, focusing on the next 3 to 5 years. So, before we get into the charts, a brief history of PayPal. Did you know that PayPal started out as Confinity, a company that developed security software for handheld devices? Having had no success with that business model, however, it switched its focus to a digital wallet. The first version of the PayPal electronic payment system was launched in 1999. Confinity then merged with Elon Musk's X.com, which later became PayPal in 2001. PayPal's mission statement is very, very interesting. We believe that now is the time to reimagine money, to democratize financial services so that managing and moving money is a right for all citizens, not just the affluent. The company went IPO in 2002 and was then acquired by eBay for a massive $1.5 billion in eBay stock. In 2005, eBay and PayPal split into their separate entities. Today, PayPal employs around 31,000 people. PayPal has gone on to acquire a number of companies, including Honey, a coupon-generating browser extension, for a whopping $4 billion. In January 2021, PayPal became the first foreign operator with 100% control of a payment platform in China, which is massive, gaining an advanced position in the local online market. In an international survey conducted in March 2021, PayPal was found to be the second most trusted brand globally. So no doubt, guys, PayPal is a giant of a company. So the question is, what has happened to the stock? If anything, what you should pick up from this stock is that the health of a company is not a reflection of its stock performance. A company can be thriving, but if there is fear in the market, people will dump the stock. It is a simple herd mentality that as investors, we want to be immune to and instead make smart, sensible decisions based on our analysis. The best way to do that is to look at the charts. So let's switch over to the charts and have a look at when we should be looking to buy PayPal. Okay, so this is my 3-screen setup, which regular visitors to the channel should be familiar with. If you're new, I'll do a brief breakdown. In the top left, we have the monthly time frame. In the top right is the weekly time frame, and down here across the bottom, we have the daily time frame. I like to look at the higher time frames because ultimately it gives me a very clear picture of what the stock has done in the past, what it's doing right now, and what it's likely to do in the future. If it's performed well in the past, it's likely to perform well in the future. And also, because we're in the higher time frames, it has a more investing approach, which means we do less work for far more profit. So very different to day trading. Day trading is where there's a lot of positions being taken every day, ultimately for inconsistent profits. A lot of work, guys. Move away from day trading, focus on the higher time frames. So let's start with the monthly time frame. This is where we at PayPal data it come through from July 2015, which was around $40, and we can see that price then went on this surge and printed its high in July 21 at around $310. So you're looking at a climb in price of 700%. However, since that climb, since that all-time high was printed, guys, the market has been in free fall and it's now around 75% down. The question is this the time to be buying into PayPal? It's really a follow-up from a previous recording that I did where we looked at where price was sat, and we want to see whether there has been any difference since then. Well, first and foremost, price is trading below the low of last year. That's an important marker for us to understand that assets that are trading below the low of last year really have a bearish bias, and this isn't an environment that you want to be buying in. Ideally, we want to see price moving back above this marker, which will give us a much higher chance of price moving to its all-time high. There is always a chance for price to fall further buying in at this point, and this is what I mentioned earlier. If you get the timing wrong, this stock can just only end up losing you money. And remember, it can stay at these low prices for a very long time, so you'll just be stuck in a stock and your money will be tied up with absolutely no growth. On the weekly time frame, it's below the 200 moving average, which is this black line, and the 50 simple moving average. Now, if you're not familiar with the 200 moving average, the 200 moving average is a proven indicator of the long-term trend. If price is above the 200 moving average, it has a bullish bias. Below, it has a bearish bias. So because price is below the 200 moving average on the weekly and below the $100 round number, which is a strong level, guys, if price held at this level, it could potentially have bounced off it, but it's now currently trading below that level. So the fact that it's below these two markers is a strong sign that, if anything, this isn't a stock that you want to be buying into, not just yet. Price could start recovering. If the S&P 500 and the stock market as a whole starts recovering, that will take this stock up with it. But at the moment, there is too much bearishness or too many signs of bearishness to want to consider getting in at this point. What we want to see is a recovery in the market and then start buying in. You don't want to guess the bottom, which is a mistake that a lot of people make. Now, on the daily time frame, price is below the 200, the 50 and the 20 simple moving averages. If I just expand the chart, we can see that there is a bit of a curve because of bullishness in recent days, but we need to see price moving up, certainly above these two moving averages, above the $100 round number, and then the 200 simple moving average. Once price starts moving above these averages, that's when, at the very earliest, you may want to consider buying into this stock. Now, for us here at Sublime Trading, we aren't caught up in brand names. I've talked about this in previous videos. We don't care about the fact that this is PayPal. What we care about is, what is the stock doing right now? Has it performed well in the past? Yes, it has. Is it likely to perform well in the future? Yes, based on its history. But there's an element of timing in terms of getting into that stock. And right now, PayPal hasn't set up to meet our entry criteria. And at the earliest, as already mentioned, is when price breaks above the 200 moving average on the daily time frame. If it does that, you can see that the weekly, if you look at my crosshairs, the weekly 200 moving average and the daily 200 moving average are at the same level. So if it breaks above the 200, it'll break above the weekly. However, the low of last year is slightly higher at around $180. This is at around $158. So there is some space. Once price breaks above the 200 moving average, there's some space for price to move above the low of last year. Once it moves above the low of last year, then we can start considering if we want to be more aggressive. If you want to be more conservative, you want to wait for price to print new all-time highs, because stocks that are creating new highs really go on to perform very well. So if this breaks above the $300 mark and the high, which is around $310, this could easily move to $400, $500, $600, and so on. Until it actually does that, forget about PayPal. Focus on other stocks that are setting up. I've shared stocks on my YouTube channel in previous videos where I've done a comparison and said, okay, look, these are famous brands. PayPal's a famous brand, Facebook, Apple, Microsoft. But if you get caught up in the brand names, you usually end up not perform. Your stock portfolio doesn't perform as well as if you have an analysis process that presents you stocks that are performing better than just brand names. That is the whole point of being an investor. And ultimately, what tends to happen is that people forget about the level of sophistication that is involved. This is all very, very simple to learn. What you've learned in this video, simple analysis techniques, but there is an element of sophistication to get from 8,000 stocks, which is what you have in the UK and US stock market, down to 5 to 10 stocks that make into your portfolio. Again, very simple to learn, but don't underestimate the sort of education phase that you have to go through. If you give yourself time, you'll be handsomely rewarded with best performing stocks year in, year out. Stocks that you'll hold for 12, 18, 24 months. Once they stop performing, let go of them, replace them with other stocks that are performing well. So, for example, if we switch to the next chart, which again is a brand name you will be familiar with, but it's not one that often is on the tip of your tongue when it comes to buying a stock, is ticker symbol HSY, the Hershey company. But look at the monthly time frame. First of all, very good history of performance. Very nice, clean move to the upside. It has gone through periods of consolidation, but when it trends very well. It's above the high of last year, which is what we want in a stock that we're looking to buy. This means it has a bullish bias. If we go to the weekly time frame, price above the 200 and the 50 simple moving averages. What we're looking for is just a breakout. We want the trend filter to turn green. It's currently grey. We want it to turn green. Once it turns green and starts printing new highs, we can look to buy this stock. And on the daily time frame, the trend filter is green. It's above all 3 moving averages. But as already mentioned, we're looking for a breakout now to suggest a continuation. If you compare the daily of Hershey to the daily of PayPal, you can see a very, very different stock. This is just weakening, whereas Hershey is working its way to the upside. Okay, guys, I hope you enjoyed that. Don't forget to like, subscribe, hit the bell notification. Where do you go from here? Go down into the description below. Click on the link. The link will open up into this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard by clicking on this button. It will take you less than 2 minutes to complete. The report at the end of the scorecard will tell you in more detail about your performance, the steps you need to take to get your portfolio performing how you want it to perform. And in addition to that, guys, you will get 30 days free access to the Hot Stocks Vault, where we scan the market for you and share with you the top 10 best performing stocks every single week. In addition to that, a whole host of other goodies, including the 3-screen setup that I've just done my analysis on. So once again, go down into the description below, click on the link, take the scorecard, come through to the Hot Stocks Vault, and I will see you in the next recording.